Okay, we've been talking about audit, and we've talked about the income side, and now we're talking about audit on the expense side. And we're not going to go real deep on this, but essentially you would get a information document request from the Internal Revenue Service, and that will list out a series of items that they want. Generally, it's everything, every documentable piece of your life to show the income side of your life and also the expense side of your life when it comes to statements and it comes to expenses on school stuff, supplies, when you're looking at medical expenses. But we're going to focus right now on this Schedule A, okay, in the context of the audit. Schedule A is the form, a lot of people call it the itemizing form, okay? And Schedule A, first and foremost, deals with medical expenses. Medical expenses don't really have a third-party verification component built in. So, which means most of the providers do not send information to the IRS. They just don't do it, okay? So this is an area, if you have a lot of medical expenses, the Internal Revenue Service is going to be looking at that. The next item, obviously, inside of that you'll have dental, and you'll also have prescriptions, okay? So, you know, obviously in dealing with that, you're going to have all the documentable proof, and your documentable proof should match really the number that's on your Schedule A return. And this obviously is subject to a threshold, meaning it has to be above 7.5% of your income to be deductible. Once you get above 7.5%, it's only the portion above the 7.5% that's actually deductible. So we're not going to go into that a lot of detail. We made it in a different video, but essentially these items, you better have the statements to back up really what the expense is that's listed on your return. Next, we talk about sort of property taxes. It should be pretty easy to document if you're paying property taxes, and that those statements should match what was paid. Now, remember, in the Internal Revenue Service, it's what's paid, not what is due. So it's the actual checks that are written in that regard. Next is registrations on vehicles. Essentially, the situation there, registrations or tabs, I guess we call it. Inside of that, the following one, when we look at that, is mortgage interest. Mortgage interest, there's a mortgage interest statement. And obviously looking at the mortgage interest situation. If these don't match the return, it can trigger the audit, but they're looking for, in the IDR, they're looking for that information. My name is Todd Courser, and I want to urge you to subscribe to my YouTube channel and also to visit CourserLaw.com.